everyone. Welcome back to Central Virginia Venture Connect. I'm Justin Ritter, your host on behalf of CBIC, the Charlottesville Business Innovation Council. Today, we have a very interesting presentation and meeting to give to you with Kelsey Foley, Director of Marketing at Clockwork, and Alex Goodman, Founder and CEO of Clockwork. Kelsey, Alex, thanks for joining us today.
Thanks for having us, Justin. We're pleased to be here and pleased to chat with you about some of the things we find as best practices for founders and companies to use with respect to their investor relations and investor reporting practices.
Awesome. So backdrop here today is March 4th, 2022. Recently, we've had a landmark decision in New York with the Theranos trial, which somewhat showed the extent of, say, perhaps the lack of private company disclosures to investors and how that can really derail and even criminally indict a founder. Because of that, perhaps investor relations and how issuers and founders communicate with their investors is now more important than ever. And so for founders or issuers that are watching this who aren't really familiar with the process of investor relations, could we please start with why is it important?
Yeah, for sure. So quick background on us. To set the stage, our business primarily runs a portfolio monitoring platform for private market investors. That is in large part delivered through software that our team has built, and in one part also delivered through a managed service where our team provides portfolio management related functions for those investors utilizing our platform. Doing that, we do have a pretty large touch point with the world of investor relations, specifically pertaining to private companies. And in our case, mostly those private companies are early stage or venture-backed type companies. So indeed, the types of issues uncovered through the Theranos lack of reporting were sort of touched home and indeed could have been, I don't know, avoided, but I think good investor relations would have simply shown light on certain things to more people earlier in the process before things blew up. So I think you'll see a lot of our message is really around using investor relations to just help minimize surprises on the side of your investor base. And that's a really important thing because for them, tracking progress of investments in your company, if they've made an investment, typically they look to eliminate surprises, good or bad. So if there's opportunity, they want to know about it early. And if there's risk or problem, equally, they want to know about that early. And I think that's, a central piece to what good investor relations is, particularly in the private company context. So with that, I think we can just dive right in. We have a handful of slides here, which I'm fumbling now. One sec. Okay, so I'm going to run through really quickly Investor Relations 101, some tidbits on how to best craft your strategy. I think at that point, Justin, we're going to have a little discussion on some strategic considerations that founders and company managers might want to take into account with respect to their investor reporting. And then we'll just showcase quickly a couple of tools that we offer at no cost to founders for trying to make investor reporting easy and painless. So really diving in, the primary point of what we present as investor relations is to make transparency something that can be desirable. As Justin's going to get into, if not on this episode, in another one, there's a lot of consideration around whether reporting in the private market context should be required. A lot of the standpoint that we have on this matter is that it's in the best interest of companies and their investors that good agreed upon investor relations practices get set when an investment is made or when a company raises money. And it's not about following rules or anything. It's simply that if you're a company receiving money from others, it just makes sense that you would report to those folks what you've done and what you've accomplished with that money. The reason we believe that's in the founder's best interest is because it helps the founder get action out of their investors. And oftentimes, the investors are a huge strategic network of people and potential help for companies. And so keeping those folks informed on how your business is doing, where are your pain points, where are your needs, it just makes them more likely to help when there is a bind or when you do have a strategic consideration or a strategic ask to make of them. So from our standpoint, keeping a frequent and not necessarily real time, but a frequent touch point, monthly, quarterly, something like that, where you're able to provide a window of insight into what's going on in your world is a really helpful way to make your investors more likely to help you. So from our view, like we say at the top of the slide, the best founders are those that communicate best. Every founder is inherently a salesperson from day one. You have to sell your product. You have to sell the vision to investors, to team members, to folks that are going to help you accomplish what you're trying to do. And ultimately, the role of investor relations is to help promote you in doing that. So these are some additional points that we say are, pretty clear reasons why a founder would want to use some form of good investor relations program. Obviously, increasing the likelihood that investors help you. That's step one or point one. The likelihood that you'll improve your impression with investors and that they will thereby, refer you to folks, whether that's in their network, to open strategic doors, to increase the likelihood of follow-on conversations, all sorts of things in that lane. We find that better communication leads to more results. Further, simply establishing trust. These are the things that are going to make an investor go to bat for you. And as I said, they are oftentimes an asset that want to help you with your business. Consider if they invested in your company, they certainly want to see you successful. And that's a good standpoint to say that they're big advocates for you, but they need to know what you need. And that's where investor relations can play a role. Similarly, just showing that you're prepared. Oftentimes, when you go into your follow-on fundraisers, investors might ask to see a recent or even a set of your investor updates. And so having these available and professional from day one can make your life very easy when it comes to marketing your business for other reasons down the road. Lastly, it just helps you stay organized and it helps you hold yourself accountable. In our world, it keeps us honest. So if we know what we're reporting to our investors about, and we have strict metrics that we're going to share that show the success indicators that we've agreed upon with those investors, it's the most clear, simple, efficient way to communicate how we're doing. And our company, kind of lives by that rule as well, because we have to have an investor relations program, to manage our companies in growth as well. So those are some points on this. I think there's, endless amount of discussion we can have on that, which we'll do in some of the later slides.
Thanks, Alex. I'll walk through now kind of best practices for forming that strategy and some of the key elements to keep in mind when you're putting together these updates. The first thing to remember is that there's definitely no cookie cutter approach for investor updates. They're definitely unique to each company and each investor. So the elements we have listed here are meant more as a guide to follow. The first step here that's definitely very important is to make sure you have a standard cadence for sending your updates. It's important to really stick to this cadence as it helps to create trust and as Alex said earlier, kind of build that rapport with your investors. Similar to that, the second important element to include is to have a set structure to your reporting. Having a templated approach both helps to save you time when you're developing and also allows your investors to know what to expect, kind of giving them an opportunity to potentially proactively ask for additional metrics or any contacts that they may be interested so that you can provide ahead of time. The third one here is really meant for founders and for companies for your benefit. Your updates are a really great opportunity for you to present your investors with specific asks. Your reports are something that they definitely will be reading, so your asks are going to be seen. It's best to be really clear and explicit with your requests for the best chance of getting your request answered. It's also important to just remember that Your investors can't help you if they don't know what you need. So don't be shy or timid with your asks. Your investors are there to help. And this is your quarterly or your cadence of reporting is a really good opportunity to include those. The fourth one here relates to the information that you'll include in your updates. You want to make sure that your materials are organized and presented in a logical format, just to make it cleaner and easier to read for your investors to really grasp what you're trying to show them. And then the final thing here happens after you send over your updates to your investors. If your updates are valuable, there will be follow-up questions. And this is good. This means that your investors are interested and they're following up more because they're really, no pun intended, invested in what you're doing. So be sure to make sure to follow up as quickly as possible. When their engagement is strong, you really want to keep it at that high level. And certainly responding in a timely response is a great way to do that.
So in relation to structure, I think just picking up that point that Kelsey made, this is an outline of, the recommended common denominator types of things to include in your investor update. We've broken it down into must-haves, company-specific sections, and then a handful of metrics. I want to make sure to leave enough time to have a discussion here, Justin, but I think just to run through a few of these, every investor update, every report you send to your shareholders needs a quick, too long, didn't read summary. That's kind of an intro. You got to get your main point of the last period right up front, fully understood, make it easy for them to take that away from the potential that they only spend 10 minutes on the update and reading the first few paragraphs. So intro's got to summarize it all. Similarly, you have to have them leave their engagement with your investor update with an understanding of key asks. And so if there are any, make sure you put them, make sure that you repeat them through the update, make sure they're in bold or whatever you need to do. But if you're asking them something, then you should make sure that they take that away as a clear action for them. Metrics, as we said before, these are the things that really help you clearly present the company and its progress. This is the stuff that you should agree upon with your investors. And if you don't, you should define what those KPIs, key performance indicators, really are. And you should be clear to report on them every time you send an update. And lastly, team. A lot of early stage private company investing is about investing in people. As that's the case, you've got to make sure to be clear with updates around who's joining the team, who's leaving, if that's the case, why, and then who you're intending to add as you keep growing the business from there. The other ones I think we'll touch on a little bit more through the discussion. I don't need to read them all out, but Justin, what are helpful things from your standpoint that we should cover in addition to the 101 that we just ran through?
The first question that comes to mind is, how much do you share? How painfully honest should you be to your investors? Like what's the right touch?
Yeah, it's a good question. It does vary from company to company in terms of how much. I think with respect to honesty, like the old adage, honesty is the best policy. I think that is no truer than in investor relations. You obviously don't want to overemphasize, the lowlights or the pain points or the bad news, but making mention of it is really, really critical. It's the way in which, to my point earlier in the presentation, that is the way you communicate things that then avoid painful surprises later. So I would say, despite it being uncomfortable, if there's a tough spot from the last quarter, this is the opportunity to rip the Band-Aid off, address it head on. And usually the good founders can figure out a way to also spin that into some sort of opportunity or silver lining. So I think, with every challenge, you sort of bring up a way in which you're embracing that challenge to move the business forward in some productive way. The how much is much harder, kind of like company dependent, stage dependent, even industry. We see investor updates that range from 15-page single spaced PDFs that engineers write that are thorough to the T. And then we see, far less in the requirements of some businesses that just have fewer, fewer things going on in the day to day, and maybe they just require a little bit less of an update. Also, if you send updates more frequently, perhaps they can be shorter because you simply don't need to, send a book report if you're communicating to your investors every few weeks. So, little bit to be defined by the particular case, but with respect to the sharing the good, the bad, and the ugly, I think you've got to do it, and it actually is the thing that builds trust with your investor base more than anything else.
I would also just add to that on sort of sharing also the bad and the ugly. This is an opportunity there's a very good chance your investors may have seen a very similar scenario across other companies that they work with, and be able to add some really valuable advice to you to kind of help you adjust and get back on course. So definitely keep them as involved as possible.
And related to that, do you have any advice on the level of detail in which you should be, or an issuer should be sharing? Like how much detail is too much detail for an investor to, what was the acronym? TLDR. Yeah.
Like everyone, the investors are busy. A lot of times in the early stage context, these are, if they're individuals, they're folks that have, lots of other activities on their plates. And so the reality why I said, make sure the intro is super clear and to the point with the key takeaways and highlights is because they may not spend a ton of time. So the amount of detail that's required is, in one part, is defined by knowing who your investors are and what they expect. And so you have to play to your audience in that sense. The other way to look at it is that you just want to be concise. You don't want to inundate them. You want to make sure that you're passing on the major headline items, with respect to each of the sections you might provide an update on. So I try to, with our company, for instance, we try to keep to like 2 or 3 highlights and 1 to 2 lowlights, per section. And then you only have so many sections you can really include deep updates about. So a lot of it becomes, I don't want to say just like sort of status check-ins, but you sort of provide general communication about what's going on. And then you highlight, 3 to 5 particular items that you want to stick out. These are not hard and fast rules either, but this is just giving you an example from, our company. And again, we deal with lots of companies conducting investor relations. So we see quite a bit of, what makes good updates and what doesn't. But people have saturation points too. So with limited time and saturation points, you just don't want to inundate them. They may also be receiving updates from other companies around the same time that you're sending yours. Again, why you want to sort of pick the most important things to bring up to the top that they would, take away from the update itself.
Do you have any advice for an issuer that may have 1 or more strategic investors on their cap table? Strategic investor meaning perhaps a potential acquirer where the issuer may not want to share certain sensitive information?
I think you'd have to be specific. Generally speaking, you can be confidential with what you communicate in an update and still provide a good, meaningful update to the broad investor base. So you could certainly, you could mention partners anonymously in a way that doesn't give away what you're doing. If you don't want to do that for that strategic, reader in your investor base. But just because they might be looking doesn't mean you should shy away from an update altogether. It's also, there's a level of discretion on the founder at the end of the day. That is to say, like, you don't need to include every single thing that's going on in the business. That could be big or small, but you don't want to avoid things that should obviously, help someone validate whether or not the company's progressing in the right direction. So I think there's a fine line there, Justin, about what you do and don't say. And at the end of the day, you sort of like the major decisions come down to how you and the company operate with your board and your major decision-making processes. So if there are things that don't really, make their way into an investor update because it's too broad of an audience, they still need to be sort of brought to the light of the right people with respect to the company's, decision-making and governance.
Thanks for that. So just a few other questions. Do you think that that investor updates should periodically include plans of action to improve performance?
Yes, as a simple answer. I think the depth of those plans and the detail level, again, depends on who's receiving that update. Is it the entire cap table? Is it a subset of that cap table? There are situations where you will provide different depth of updates to different groups within the cap table, and that's also, it's allowed. You certainly don't want to send different messages, but some things might be more, appropriate to share with a subset of the cap table. Yeah. Does that help answer it?
Yeah. I guess, and somewhat related to what should be in or not periodically, should you always have an ask to the investors in a periodic update?
Again, there's not a hard and fast rule. I tend to say it's good practice to have one. That sometimes you may just send an update that's more of a status, a status check, and that doesn't always require an ask. I would say in a quarter where we would not present an ask, we would definitely do so with the aim of presenting one, more concentratedly in the next update. So it's kind of a way of saying you don't ask every single update for something. You come off as needy. Maybe you dilute those asks by putting too many out there. So it's not mandatory that each update has an ask, but in general, the updates should be actionable for the people who are receiving them. So, almost every company at any point in time needs help with something. So this is an area where you can, put that out there to a group of, invested people. The depth or the focus you put on that particular ask can be made way, heavier or not. And that's sort of the way in which you decide how important it is to actually put light on that ask. So you can make the ask seem more significant or less significant by how prevalently you feature it in the update. As another example of maybe it's not a really key ask, you put it out there, but you don't harp on it. So all that's to say, it's not absolutely required you put one in every update, but generally you have needs. This is the opportunity to share those needs. And you want to make sure that when you really need something, it's absolutely clearly communicated.
Well, thanks for that. Last question, Kelsey, maybe you can help me with this. For the pre-revenue startups out there, are there any specific metrics that you can give to your investors for a company like that?
Yeah, it's a great question. I think, as you kind of evolve and grow, your metrics do tend to be more around the sales aspect and the revenue coming in and going out. I think kind of if you're in that pre-revenue stage, as Alex kind of mentioned, there's some of those other things around team members and maybe kind of product growth that are important. Maybe kind of if you're doing research or something ahead of time, keeping your investors updated on that. And then most importantly, kind of keeping a timeline on go-to-market is really important to keep your investors looped in on, and certainly something that comes kind of in that pre-sale phase. Alex, I don't know if there's anything else you want to add in there.
No, I think you nailed it. Some of that depends on the company type and the industry you're in, and depending on those things, you might be pre-revenue for a long time if you're a really deep R&D business. you still have a lot of things to discuss that are going on, that are uses of funds that, you know, people would want to hear about, that indicate if you're on the right track or not. So I think there's plenty to discuss, even if you're pre-revenue, because if you were able to raise money as a pre-revenue company with some form of plans, then, you know, there's people that want to hear about how you're doing towards those plans.
Well, that's all the time we have today. Kelsey, Alex, thank you for your insights today.
Yeah, thanks for having us. Pleasure, and hope to do it again. If you have follow-ups, and let us know. I think one last note, if anyone has questions for us, we're always available. You can ping us at contact@clockwork.app. That's our website and our general email bucket. And if you're a founder and you have investor reporting needs, feel free to poke around our site with respect to the things we offer for free in the investor reporting realm. We built our platform to be founder friendly and make it easy to share updates, and we don't charge for that. So thanks a bunch. And Justin, appreciate it again.
Awesome. And with that, thank you. This is Justin Ritter, your host for Central Virginia Connect. Until next time, see you then.